Welcome back to Investing Talk Podcast. Today we're tackling a really interesting one, Nuburu. You, our listeners, actually asked us to take a closer look at the investment case here. And the big question, the really loaded one we're trying to answer based on the source materials is, well, is this stock a good buy right now? Before we get into all that, and it's a fascinating story, just a quick reminder, please do subscribe, like the show, leave a comment. We really do feed off your suggestions, so if there's another company or some weird corporate saga you want us to unpack, just let us know below. Okay, so Nuburu. What makes this so compelling is this just massive contradiction in the data we've seen. The sources paint two completely different pictures. It's pretty stark.
It really is, yeah.
On one side, you've got these fundamentals that look, well, catastrophic, financial decay, basically. But then on the other side, there's this explosive recent stock momentum, right? Driven by some big strategic news, especially around defense.
Exactly. It's like a structural crisis hitting head-on with this huge growth story. So our mission today really is to try and synthesize those two things. We need to weigh up the fundamental risks, the real possibility of failure against what looks like, massive upside potential from these defense catalysts. Is it a genuine turnaround or just speculative hype?
Okay, let's try to unpack that. We absolutely have to start with the financials, right? The painful truth on the balance sheet. What do the latest reports actually tell us about Nuburu's basic health? Let's hit the red flags first.
Well, the raw numbers, they're not just bad, they're alarming, honestly. They point to some really significant immediate headwinds, the kind that, in a normal company would probably signal insolvency is on the horizon. If you look at 2024, the company brought in revenue of only $152,127.
Wow, hang on. I just want to repeat that number. $152,000 for the whole year.
That's it, precisely. And that represents a revenue drop, a contraction of 92.7% from the $2.09 million they reported just the year before, in 2023. A collapse like that, it points to severe problems, right? Execution failure, demand just vanishing, maybe the old business model completely failing.
And I'm guessing the costs didn't shrink at the same rate.
Oh, absolutely not, no. Their net loss didn't just continue, it actually widened significantly. They reported a net loss of negative $34.52 million for 2024. That's up from a $20.71 million loss in 2023. So when your losses are actually accelerating while your revenue has basically disappeared, well, that means margin pressures are intense. Expenses are just totally disconnected from sales.
Okay, let me just frame that for everyone listening, because this is really the heart of the financial risk here. The company's total market cap right now is hovering around, $28.8 million?
That's right. And what's fascinating and frankly terrifying from an investment standpoint is that their annual net losses are substantially more than their entire market value. They're burning cash at a rate of about 1.2 times their market cap. That's not just a challenge, that's a full-blown structural crisis. And yeah, the sources confirm no positive free cash flow, no dividends, nothing going back to shareholders.
So with that kind of burn rate, unless there's some kind of radical execution or a big cash injection fast, the risk of, massive shareholder dilution or even just outright failure seems incredibly high. You're basically buying a stopwatch that's already ticking down.
Why? Why are we even having this conversation? Is there any technological foundation, any core IP or value that could possibly justify riding out this kind of financial storm? Right, and this is exactly where the narrative shifts, from balance sheet disaster to potential speculative gold mine. If Nuburu didn't have genuinely world-class defensible technology, yeah, the stock would likely be near zero. But they do have this niche, a defensible one, in blue industrial laser products. Specifically, things like their AO150 and BL250 lines.
Okay, blue lasers. Why blue? Most people hear laser, they think infrared, IR. What's the big deal with blue for manufacturing?
It comes down to the physics, really. Standard IR lasers have a really tough time with highly reflective metals. Think copper, gold, even some aluminum alloys used in next-gen electronics or batteries. They just reflect too much of the IR light. That means wasted energy, slow processing speeds, sometimes inconsistent welds. Blue lasers, though, are absorbed much, much more efficiently by these specific materials.
Okay, so for certain high-tech applications.
Exactly. If you're a defense contractor building complex wiring or making advanced batteries or 3D printing intricate metal parts, that higher absorption translates directly. You get better weld quality, almost no wasted energy, and speed improvements that can be 5 to 10 times faster than traditional methods. That specific advantage, better performance on shiny metals, that's the technology moat that keeps this whole investment idea afloat, despite the financials.
Got it. So the tech is legit, but the old way of selling it clearly cratered, hence the revenue collapse. Now, our sources are pointing to this huge strategic shift, right? A pivot away from just general industrial sales towards these high-value government and defense contracts.
Precisely. Management seems to have realized that selling super high-tech, expensive gear into the, cyclical general manufacturing market just wasn't working. It was unsustainable. So they've explicitly shifted focus. They're targeting high-value government and enterprise markets, defense, critical infrastructure, they call it, their transformation plan.
Okay, let's zoom in on the catalyst then. The big event that seems to have totally flipped market sentiment and kicked off this current volatility.
Yeah, that was the announcement back in October 2025. Nuburu announced they were forming a strategic drone joint venture. It involves a subsidiary, Nuburu Defense, and another company, Maddox Defense. And the specific target is advanced military and commercial drone systems, an area obviously seeing just huge increases in defense spending right now.
Okay, hold on. Let's be realistic here for a second.
Oh.
They just reported, $150,000 in revenue for an entire year.
Mm-hmm.
And this joint venture is apparently aiming for around $100 million in annual revenue by 2028.
Yep, that's the target they put out there.
That number is, it's astronomical. It implies growth of something like 66,000% in 4 years. How much of that is actual planning versus, just aspirational marketing to keep the stock price up?
That's the million-dollar question, isn't it? And yeah, you have to be deeply skeptical about hitting that exact number. You should assume it's aspirational, like you said. But the market reacted so strongly because of the partner and the sector. Maddox Defense presumably brings established channels into the defense world, and defense contracts, especially for drones, tend to be long-term, higher margin, and funded by government budgets, not, the ups and downs of the commercial market.
So the market surge, that 25% jump in pre-market trading.
Yeah, that was the market betting not on today's revenue, obviously, but on the chance of capturing even a small slice of that massive military drone budget, leveraging Maddox's connections.
Okay, but what about the money to actually do that?
Mm-hmm.
To scale up production to handle even, say, $10 million of that $100 million target? A company with a tiny market cap and huge losses doesn't just magically build a new factory, right?
No, absolutely not. And that funding question is critical. The sources do suggest there are other moves happening alongside this. Things designed to build investor confidence, which you often see before a company tries to raise capital or position itself for acquisition. Like, they brought in a dual CEO structure, one tech-focused, one execution finance-focused, and they're actively working on getting back into and staying in compliance with the NYSE listing standards.
So housekeeping stuff, getting their ducks in a row.
Exactly. It suggests they're gearing up for some kind of major capital event, probably tied directly to whether this defense pivot looks like it's actually going to work.
Okay, so if you're a trader, or maybe a very speculative investor, looking for that turning point, when do we actually find out if this strategy is gaining traction? What are the key dates we should be watching?
The next couple of months are absolutely crucial, make or break, really. There are two huge potential inflection points coming up. These could either fuel the rally further or, send the stock crashing back down towards that fundamental reality.
Okay, what are they?
First up is November 12th, 2025. That's their Q3 2025 earnings release. Now, nobody's expecting profits, obviously, but investors desperately need to see two things. One, some clear sign of progress on implementing that transformation plan, and two, crucially, a lower burn rate, or at least smaller quarterly losses than before. That would lend management some credibility.
Right, showing they can control costs while pivoting.
Exactly. And then, arguably even more critical, is December 15th, 2025. That's the deadline they've set for finalizing the definitive joint venture agreement with Maddox Defense.
Moving from a framework to a concrete deal.
Precisely. Executing that milestone is just paramount. A framework agreement is nice talk, but a definitive agreement means the legal and operational path for that defense revenue is actually real. If that deadline slips, well, you can expect some serious selling pressure on the stock.
Okay, so those are the hard dates. But beyond that, this is where things get kind of wild, right? The speculative chatter. What sort of rumors are floating around the finance forums that might give this stock another, sudden jolt upwards?
Oh, the speculative buzz is definitely loud. And it's almost entirely centered on M&A mergers and acquisitions. Given the clear pivot into military drone tech, there's serious talk about a potential acquisition. Or maybe a large strategic investment from a bigger U.S. or European defense contractor.
Makes sense. Those big players need cutting-edge tech.
Right. They need advanced manufacturing capabilities to stay competitive, and blue laser IP, especially for drone components, is probably pretty high on their shopping lists. And what's really interesting here is a specific rumor about their intellectual property. Some industry watchers are suggesting Nuburu might be negotiating to get back or restore key parts of its patent portfolio, maybe stuff that lapsed or got leveraged when they were in worse financial shape.
Oh, wow, okay.
Yeah, securing that IP, fully locking down their patent protection, would instantly make their technology moat much stronger. It transforms them from just a struggling company with some cool tech into potentially a vital protected technology asset.
That IP angle is huge. It really changes the calculus for a potential acquirer, doesn't it?
Yeah.
Makes them less of a risky supplier and more of a must-have target.
Exactly. And then there's the European angle, too. Because the joint venture specifically mentions targeting NATO-compliant drone systems, there's speculation about European interest. You hear chatter about maybe direct funding or a procurement partnership being announced by an EU member state, someone looking to bolster advanced manufacturing within the NATO alliance.
Okay, that kind of state-level validation would be massive.
Huge. It would act as an immediate, powerful catalyst, validating that whole defense strategy overnight.
All right, let's shift gears completely and look at the charts. How is the market actually processing this crazy mix of zero revenue, but maybe infinite potential?
Yeah, the charts are just screaming one thing right now. Momentum. Pure momentum. The stock is up over 130% just in the last month. That's just violent upward movement. And it's clearly fueled entirely by this news flow and heavy participation from highly speculative traders who are betting this defense pivot is the real deal.
And the technicals support that short-term view.
For now, yes. If you look at the technical setup, it's definitely short-term bullish. It's smashed through pretty much every major long-term resistance level. It's trading well above its 50-day moving average, well above its 200-day. That confirms, that speculative money has fully bought into this breakout story, at least for the moment.
But the ride must be incredibly bumpy, right? This isn't exactly a buy and hold situation.
Oh, absolutely not. You need a strong stomach for this one. Our sources flag extreme volatility, like 55.2% monthly volatility. Huge swings within a single trading day. This is attracting sophisticated traders looking for those outsized gains from volatility. But if you're holding this stock, you absolutely must be prepared for like a 50% drop on any hint of bad news. Say, if that JV agreement gets delayed.
Yeah, you're buying the story, not the current profit and loss statement.
Precisely. The P&L is irrelevant right now. It's all about future potential.
Okay, let's try and pull this all together then. We've got this cutting-edge blue laser tech solving real defense manufacturing problems. Check. We've got a clear strategic pivot into a hot sector. Defense drones. Check. We've got massive speculative momentum behind the stock. Check. But all of that is balanced against this immediate risk of financial failure, where their cash burn is literally bigger than their market cap. So, putting all that contradictory source material together, what's the final verdict? The investment takeaway.
Well, the overall consensus from the sources we looked at actually points towards a bullish rating, believe it or not. But we have to be super clear about what that means. I'd personally rate the speculative upside potential maybe an 8 out of 10.
An 8 out of 10. Wow. That sounds really high for something this risky. Usually an 8 implies more stability, doesn't it? We're basically betting on a flawless execution of a massive, totally unproven JV or a buyout. Isn't the risk of total failure just as high, maybe higher?
That's a totally fair challenge, yeah. The 8 out of 10 reflects the sheer scale of the potential reward if they pull it off. So it's attractive primarily for short-term trading. Because of that high volatility and the critical news flow we expect in the next couple of months, Q4 2025.
So for traders, yes. What about longer-term investors?
For anyone looking longer term, this has to be treated as a highly leveraged binary bet. It's not really an investment in the traditional sense right now. It functions entirely like buying a call option, really. A bet on management hitting those key milestones, finalizing the JV agreement, landing those first military or industrial contracts, and ultimately positioning the company so well that a big defense prime has to buy them out at a premium to get that blue laser tech quickly.
Okay, so the bottom line for you, the listener, really seems to be this whole thing hinges completely on management execution, like right now, the next 2 months. It feels very binary. Either they nail that definitive drone JV agreement by December 15th and show some cost control in the November earnings, or the old financial problems just swamp the new strategy no matter how good the tech is.
Exactly. Which leads to a really interesting final thought for you to consider, something to mull over based on all this. Think about that speculative chatter, especially the rumors about them potentially restoring or strengthening their patent portfolio. What could the real enterprise value of Nuburu be if they could fully secure and validate that technology moat before a big defense company swoops in? That potential gap between the current, say, $28 million market cap and what that fully secured IP might be worth to an acquire that gap is pretty much the only thing driving this extreme speculation right now.
A fascinating, if incredibly risky, situation. Great analysis of some really challenging source materials. Thank you for walking us through it. Keep digging into your own sources, everyone, and we'll catch you on the next one.